Hello and welcome into the KE Report. I'm your host, Chad Markwitz, and today we're getting an update from Robert Sinn, also known as Goldfinger on CEO.ca and CEOTechnican on X/Twitter. Robert is the publisher of Goldfinger Capital on YouTube and Substack. And Robert, it's always great to get you on the show just to get your thoughts on a range of things, the technical side, the fundamental side, maybe some of your key takeaways from the conferences we were just at in Vancouver, kicking off the year at the Metals Investor Forum and the Vancouver Resource Investment Conference. A lot going on, but I feel like it would be crazy if we didn't start with what's actually happening on the charts of the yellow metal. Gold breaking out to new all-time highs this week, currently around 2850 in that range while we're talking. What do you make of the technical picture for gold?
Hey, Shad, it's always a pleasure. Thanks for all the great work that you do. Gold and silver. Gold is breaking out. Well, that's obvious. Silver, I don't know if we can't really call it a breakout yet because it's still well under its highs from Q4 2024. But gold, just an absolutely stellar week, stellar performance in January. I mean, I'm not even sure what the gain is in January. Is it 10% at this point? It's almost 10%. Phenomenal. And when we saw the futures roll from February to April a couple of days ago, we saw that move up to the 2790s. Obviously, 2801 was the high from October 2024, but now we've just blasted right through it. It's continued going above 2850. So it's a fantastic chart pattern breakout. It's demonstrating enormous strength. And there's no simple proximate cause or easy way to explain why is gold rallying so much. I mean, there's a lot of different factors that we could attribute it to, but it's not just one factor. It's not a simple soundbite. And I look at sentiment gauges, and yeah, sentiment is bullish on gold, no doubt about it, but it's not extreme yet. And we have to think back to like, what does a bull market feel like? If we think about bull market in tech stocks and AI stocks of the last year, people were bullish. People were buying more. It was becoming a more popular trade and price kept going up. And so that's what's starting to happen with gold. So I think that gold bulls are well known to be paranoid and always expect the rug pull around the corner. But I think there's also a time to enjoy it and enjoy the trend and, enjoy the ride, enjoy the breakouts. So that's kind of how I feel in gold here. I also don't want to see it go too far too fast. So let me say, I'm happy with 2850. I don't need 2900 on Monday morning. We could slow it down a little bit here for a few days or a week. I'd be totally happy with that. Silver is lagging, as we know, but still very constructive chart pattern bottom formed in silver around 29 at the end of 2024, and it's definitely started to move up. And so now the question, I think what my focus is turning to is, well, if gold and silver prices are so strong and gold is breaking out to all-time highs, the gold producer earnings, what are they going to look like, And we're starting to see some really powerful moves in Kinross and AEM. Even Newmont is starting to move up off of the bottom. It's actually kind of interesting, Chad, that Newmont put in place a double bottom in the final 2 weeks of 2024. So that was actually a double bottom, chart pattern double bottom amid capitulation level negativity on the company. And it's had a strong January. So glass half full here.
Yeah, I'm glad you brought that up, Robert, because I was looking at a chart with a fellow investor yesterday of Newmont, and everybody knows it's the biggest input in the GDX. It's the biggest company in the gold space. It's the one that generalists will turn to. Even billionaire investors, when they jump into the gold sector, often buy Newmont. And it's been very disappointing. It actually rung the bell in October when it put out a earnings miss on the expectations, and that's really what started the cascade down into November and December into year end. So the question is, with Newmont having divested a lot of its projects, it's raised all this cash by selling these, it's bought back some shares. Can it finally put out a report that actually impresses to the upside and beats? And it looks like technically it's setting up. What could that bode for the sector if we see a lot of these producers start doing earnings beats because Q4 was a bang up quarter for them?
Well, really, I think it's keep it simple, stupid. If Kinross and Newmont, maybe not Barrick, but let's just stick with those two for for now. And obviously, we could go down the food chain into the mid tiers as well. But if the gold producers start to actually beat expectations, and God forbid, raise 2025 guidance and show record free cash flow quarters yet again, then we're in a bull market, baby. I mean, just don't overthink it. If we are at all-time high gold prices, the trend is strongly higher, the tailwinds are at our back finally, and the sector, the gold mining sector, has just come off some of the most difficult few years in its history. And there's been a right sizing of operations among the big companies like Newmont, like Kinross, and they're really turning the corner. Then it's a bull market. It's time to get a little greedy. I don't want to get too greedy, but it's time to actually let profits run and enjoy the tailwinds, because we've had headwinds for so long in this sector. And so let's enjoy tailwinds for more than a few weeks.
Yeah, I don't even know if some people remember what a bull market feels like in this sector. But when you look at GDX, and we were talking about this off mic, it doesn't feel like you're in a bull market because with gold breaking out to record highs just like it did last year, the GDX has yet to come anywhere close to its 2011 highs, not to mention the 2020 high where gold was, $700 less than it is now, or $800 less than it is now. So as gold continues to blast higher and you look at the GDX, it just doesn't feel like you're in a bull market. And you made a great point. Don't buy the GDX. Don't hang out in the GDX. I'd love you to expand on that as far as buying the sector versus being a stock picker.
The GDX is like owning gold mining beta. You have big exposure to Barrick and Newmont. Basically, a quarter of the portfolio is in those two companies. So that you're overweight the biggest, most complex companies, the ones that are hardest to analyze because they have so many operations around the globe. And they've consistently disappointed because the complexity of managing their global operations has been daunting in recent years. And they're completely exposed to cost inflation across the globe. I mean, they're massive payrolls. They're buying a lot of oil, gas, steel, what have you, to make their operations go. And labor is a huge factor in their operations. And so labor costs the last 5 years have absolutely skyrocketed. I mean, in some areas up 50, 60, 70%. So you've had a lot of headwinds in those. So why own the GDX? Why not own the leaner, smarter, more agile companies that can surprise to the upside more consistently, and also that aren't as heavily owned? I mean, let's be honest. The big two or the big three gold miners are the ones that are most heavily owned by investors. They're the ones that the generalists focus on. And so maybe there's not as much of an opportunity for alpha there. The real opportunity for alpha is in the mid tiers, and God forbid, again, let me throw it out there, maybe the juniors, like maybe we're actually getting to that stage of the cycle with gold rallying from 1650 to 2850 in just over 2 years since October 2022. Maybe it's actually that time in the cycle for the juniors to really catch some love. And knock on wood, Shad, knock on wood here. I don't want to jinx it, but there's some green shoots starting to form here in January 2025.
Yeah, I hope that it's not jinxing it by talking about it, but we usually see coming out of tax loss season, the seasonal lift that we get in January and February. Now, we didn't see that last year. It was kind of a weird year, and we didn't get the PDAC curse. We actually had gold lift off right after the PDAC. So it was a weird year seasonally yet last year. But over the last 20, 30 years, if you look at seasonality charts, this is usually a good time of the year. People get repositioned. But can you think back to the last decade where people kept saying, man, if gold could get back above 1921 like it did in 2011, we'd have a bull market in these mining stocks. If gold could get above 2000, 2100, 2200, well, now we're at 2850. What in the world is it going to take to get these juniors moving? But last September and October, I think we saw like a sneak preview of what it was like to have a little bit of excitement in the sector. It was starting to come back. Of course, the rug did get pulled away from investors, so you can understand why people are gun shy. But you're saying now is the time to be a little greedier, and maybe, just maybe, the juniors can run. Could we see not a rising tide lifting all boats, but at least more participation from the developers, more participation from the advanced explorers in this leg of the cycle?
Yeah, I mean, I've been talking to some CEOs and some other investors across the sector, in the last several weeks, including at conferences in Vancouver, and there seems to be a consensus, an idea, a thesis forming that there's going to be more mergers and acquisitions in 2025, and it's going to start to move down the food chain into the mid tiers. And, just looking across the landscape, there's companies that are ramping up, mining operations in various parts of the world, including Canada and the States. And that's going to be continuing over the next couple of years. So there'll be lots of opportunities across the mining industry, the gold mining industry more specifically, for companies to perform and show that they can generate value as they ramp up operations and cash flow generation and profitability and start to turn into real companies, right? So we have an opportunity for some more positive optics and some more feel-good stories across the sector. Again, fingers crossed. I think 2024 had a few really negative stories hit the sector and sour investor sentiment. They said, well, if that company is going to have that accident and have to shut down, then why am I even going to be involved in this sector? It's too tough. It's just too tough, right? And so maybe that's in the rearview mirror now to some extent, and we have an opportunity for the sector to perform and show that they can operate profitably and at a higher level. And mergers and acquisitions could absolutely also be a strong infusion of capital. I mean, especially if there's some cash deals done and then shareholders take that cash and they reallocate it across the sector. It could be a virtuous cycle. Again, I'm kind of giddy today, Shad, so I'm sorry for my optimism, but I'm feeling pretty positive.
Yeah, it's weird to have an optimistic call on precious metal stocks. It's weird for me too. But if you think to M&A, last year was actually a bang up year. I counted at least 24 M&A transactions. Sometimes they were mergers of equals, sometimes they were takeovers of a producing asset, sometimes it was a development project. There was a lot of take unders, a few takeovers, but it was actually a year that got money circulating. If we could build on that in 2025, it would be pretty exciting. And we've been talking mostly about gold and silver here. Maybe that's the giddy part, but let's look at the base metals too. Let's look at the larger commodity complex. You actually had a great talk in the Metals Investor Forum. And the year before, you had done gold and copper, but this year you really focused on China. China is the mouth of the world. They are the ones that consume most commodities. They actually do a lot of the refining. They have a lot of the specialty metals over there. It's a huge country, second biggest economy in the world, and it does move the needle in the commodity space. You made some great points about China in the talk. Maybe give people a condensed version of that here that missed the talk.
Yeah, absolutely. So yeah, it was kind of a complicated presentation, a little longer than maybe I should have for that 20-minute block, but it's an important topic. And I always think a few times prior to doing a macro presentation, because macro is really tricky and it's always in flux and the backdrop can change in a few weeks or a couple months. And so your presentation can suddenly turn stale. Well, it's been 2 weeks and so far it's still quite topical. It's not stale at all. And I think China is really the important thing to watch in 2025, and also what's going to happen between Trump 2.0 and Xi the leader of China. They're clearly going to have a lot of talks this year. They're going to have to sit down and work out a deal of some sort, a compromise. And it's not going to be easy because the two countries have different key objectives. They have various priorities that don't necessarily align, but they're very important trading partners. They're two of the largest three economies in the world. And China is a very important player, certainly in base metals, in gold, in oil. And one of the themes that we've seen in the last several years is China has had a voracious appetite for accumulating gold. And one of the slides I showed and points I made is that actually what the People's Bank of China publicly states as their official gold holdings and official gold purchases vastly understates what the real gold holdings and gold purchases are. There's a lot of good research on this. If you want to spend a day searching around, you can find a lot of good information on this topic. But essentially, there is stealth or secret gold buying since 2022 coming from China. And the numbers are obviously tricky to really get a full handle on, but conservatively, China's secret gold buying in the last 3 years is over 1,000 metric tons. So they're understating their reserves by at least 1,000 tons and probably significantly more. I think it's probably more on the order of they officially state 2,300 tons of gold reserves. It's probably more, it's about 6,000 tons. So China is actually getting close to the US and their 8,200 tons of gold reserves that supposedly is held in Denver and Fort Knox, et cetera, et cetera. So you have to ask yourself, why is China buying gold, Shad? Why is China having such a voracious appetite and plowing billions upon billions of dollars of their reserves, their formerly holdings of treasuries, and switching it into gold? And so I think that is a very important question to ponder. And I don't necessarily have all the answers, but I think the simplest answer is that gold represents an important part of China's future, an important foundation for what they view as the future world monetary order. That definitely the Chinese currency plays a very important role in, and gold as the underpinning, the foundation of China's currency, and also the Chinese people. So let's not even talk about the People's Bank of China, the government. Let's talk about the Chinese people, 1.4 trillion people. Well, they are estimated to own 30,000 metric tons of gold. Now, obviously, that's a ballpark number. We can't know exactly how much, but it's around 25 or 30,000 tons. That's a lot of gold. That's 3 or 4x what the US owns. So it's substantial. And it's an important part of China's wealth, both public and private. And so China has a vested interest now in gold rising in price and usurping the dollar as the reserve currency. And I believe we are starting to see that play out here in January 2025. And I think it will continue to play out over the next year. And who has been buying gold in January? Probably a number of players, but China is certainly one of those driving forces.
Yeah, it's just fascinating to see how both on the governmental side and the People's Bank of China side, they've been massing up large sums of gold and have been for some time. But then as a population, as a people, they actually encourage their citizens to buy gold. When's the last time I heard the US government or the Canadian government encouraging its citizens to buy gold? So they have a good breadth of ownership from everyday people. And I've even seen movements with teens and college students even starting to acquire gold beans
Mm-hmm.
and counting them and putting them in jars and, fractional parts of gold. And so it's just at a very early age, people get into gold as a store of value. It's a little
Mm-hmm.
different. And they also have limited access to cryptocurrencies. I don't know if that plays a factor. Let me ask you about the cryptos because, we hear about it all the time. A lot of people thought they were stealing gold's thunder last year. And maybe to some degree that was true because there was genuine excitement in the crypto stocks and crypto miners. Bitcoin blasting to 100,000. Can there be room for both asset classes to move up in tandem?
Yeah, I think with Bitcoin, there is definitely room. And I separate the Bitcoin from the crypto. Okay, quite frankly, I think they're two different animals. With Bitcoin, I can make an argument it's digital gold. I can understand why an investor who believes in sound money would own Bitcoin. I own Bitcoin. That makes sense to me. I look at the Bitcoin chart. It looks like a healthy, bullish chart. It looks like a bull market to me. I have no problem with Bitcoin. Crypto is a whole different animal, and that's a very broad word. That's like saying the word football, where you're talking about high school football, college football, pro football. I mean, it's a very broad term, right? And crypto even includes like meme stocks and all these shit coins that have no utility and no purpose, and anybody can just start one. I mean, if we wanted to start a KE coin, we could. And everybody who, hears the podcast could buy KE coin and it'd be great, right? But there's no real purpose. There's no objective aside from, enriching a few of the people who had the seed coins, right? Which is very silly, right? And so I don't think that crypto has anything to do with copper or gold or real hard assets. I think they're completely different animals. And if we think that junior mining stocks are speculative, well, meme coins and all of that stuff is on a whole nother level of speculativeness, right? So, yeah, I mean, that's how I feel about it. And if an investor wants to own Bitcoin, if a gold investor wants to have exposure to both, I completely understand that. It's a good way to diversify your exposure and make sure that if Bitcoin does go to whatever 200 or 220,000 that a lot of people are saying it's going to go to this year, well, at least you caught a piece of the ride. Um, but as well, I think it's very important for investors today to not give in to FOMO. So we're talking previously about trading psychology and market psychology. I think there's a lot of FOMO out there, Shad. So just because Trump coin went up 50x the first 24 hours it was trading doesn't mean you have to participate in it and FOMO into it at a very crazy valuation with no real fundamental, rationale for why you should be invested in and why you should own it. I mean, the only reason to own or speculate in a lot of these things, I would say 95% of them, is just the greater fool theory. You're buying it, hoping to dump it to someone else who's a bigger fool than you in the future. And that's not really a great investment thesis. I mean, when I went to business school, yeah, that wasn't one of the courses that we took, the greater fool theory and how to FOMO into speculative assets. But that is what is going on in 2025. There's so much of this FOMO going around. YOLO, you got to be a part of it, unless you want to be poor. There's all this stuff out there and it's not healthy, right? And so I think that, investors who are seeing these moves in AI stocks and meme coins, et cetera, really need to get back to the fundamentals and make sure they have a firm foundation in terms of their process and why they're investing in things, why they would buy a stock, why they own gold or what have you, and make sure that you've got a firm game plan and you stick to it because there's a lot of temptation out there.
Well, I'm glad you went there because actually that's where I wanted to go next. Well, 2 points. One, I'm glad you went there that we're going to start the KER coin and Goldfinger coin so we can, you heard it here first, folks. We're going to be launching our own cryptos. No, but the other thing is the wild speculation we've been seeing really at the end of last year into things like fart coin going up to a $1.5 billion valuation. Think about the companies you could buy for 1.5 billion. The Trump coin, but also the AI stocks, quantum stocks, space stocks. It reminds me of 2021 when we were seeing NFTs and we were seeing SPACs and all these crazy crypto and fintech stocks going up at such a fast rate that investors thought that was normal. And they're trading on Robinhood and Webull and Stash and these like things that almost make trading a game where they're getting prizes and confetti when they make a trade and are buying options and taking huge amounts of risk. and think that that's investing. And the end of last year, Robert, I started getting people email me saying, I'm giving up on this sector. After being in
Mm.
here for 10 years or 15 years, everybody else is winning but us. Look at what's happening in tech stocks. Look at the general markets up 20% 2 years in a row. Why am I in this silly sector? And they're kind of giving up at the point where, as we've been discussing, we may be hitting, a really nice bullish phase. And they've also gotten warped by the expectations that you should become a millionaire overnight and have a Lambo in 3 months. And if you're not
Mm.
going up 5x, 10x, 50x, you're doing something wrong. Maybe speak about the trading psychology and what is a successful trader, and maybe people setting their parameters a little bit more based on the ground.
Yeah, a successful trader is one who follows a process and sticks to what they're good at and what they know works. Something that has a strong underpinning and a process, which means risk management, time frame, catalyst, and something that you understand. Right? I think that's the most important thing, something that you understand. If people are tempted to get involved with things that they don't understand, they don't have experience in, they don't have any expertise in, then I think they're just practicing the greater fool theory, and I wish them luck. And not to say you can't make some quick profits doing that, but I know it's not going to last. Okay. Like I know over a large sample size, if people are just FOMOing into stuff and chasing trades and chasing breakouts and stuff that they don't understand, they're going to lose their shirts over the long run. Okay, I have very strong confidence in that. I have a lot of evidence for that. Okay, so I think the first thing I would say to people, and I would say this to myself, is don't focus on what everyone else is doing. Focus on what you're doing and what you're good at. And if you're so focused on other people and what you think they're doing and what they're telling you they're profiting from, I think you're lost, right? And I think there's a lot of people who exaggerate and maybe even flat out lie on social media about their performance and how much they made on different trades and yada yada because they want to get a bigger following or they want to sell you something, they want to sell you their premium service for $5,000 a month or whatever it is, right? They've got some other game going on, right? So you need to stick to your game and you need to figure out what your game is. So that's the best advice I think I could ever give any trader or speculator or investor, period. A market participant is figure out what your game is, figure out how you're going to play the game, and formulate a game plan. And I mean, actually, like write it down, like start a Google Doc or what have you, and put together the foundation of your process and sort of where you think your edge could be and then see if you do have an edge. And the only way you really see it is by getting in there and getting dirty in the market and showing a pretty good sample size of trades or investments and proving that maybe you actually do have an edge, right? So don't focus on what everybody else is doing.
Just a question as I listen to you talk about that and knowing what you're good at and playing to your strengths and investing in what you understand, I can't help but wonder, and I've asked other people this question, and there's usually a head nod, is our sector overly complex to the point where it's harder for generalists to understand it? What I mean is, if you're investing in fart coin or Trump coin, or if you're investing even in Bitcoin, it's a pretty simple story. If you're investing in Nvidia, it was a pretty rough week for it with the DeepSeek situation. We didn't even get into that yet, but in general, it's a chip maker.
Mm-hmm.
They make chips for AI. It's a simple narrative. When we look at mining stocks, it's like, well, wait a minute, is it a producer or a developer or explorer or a royalty company? Well, is it above ground mine or is it underground mine? Is it oxide? Is it,
Mm-hmm.
sulfide? How do I interpret a drill results?
Is
Wait a
it
minute,
silver,
is it
lead,
equivalent?
zinc? Is it copper and gold porphyry?
Yeah,
Yeah,
is
yeah.
it too complex? Is it too hard for investors, or is the industry making it overly complex and not playing to basic investor fundamentals?
That's a great question. And that's a multifaceted response. I mean, yes, it is complex. The detail can go very deep and very technical. I mean, when you look at some of these technical reports, these PEAs, these PFSs, these mine plans, they can be very technical. There's no question about it. But does a retail investor or even like an institutional investor need to have that level of technical insight to understand, like an investment thesis and get a pretty good hold of it, right? I'm not so sure that you need to have that kind of extreme detail, but it is a complicated sector. It is multifaceted because the macro drives it. It drives the big bus, but with like a junior explorer, if you get the micro wrong, if they drill dusters, if they drill 10 holes in a drill program and they're all dusters, well, you're going to lose your shirt even if gold went up $300 an ounce. But on the flip side, you can have a company that has good results from drilling, like not stellar results, but good results. And the stock could still drop 40% because the price of the metal dropped a lot, right? So, and then there's the share structure, there's company management. So yes, it is complex, but we don't need to make it too complex. And also a couple of shortcuts. You can follow really smart people. You can choose a handful of guys or girls, 5 people that you think are really smart and you respect their analysis and their insights. And they're going to pretty much call it like they see it, as best they can. And then take their ideas and their analysis and then formulate something just based upon that as a foundation. I mean, that's definitely a pretty good shortcut. And also, you can just specialize. So I wouldn't recommend owning 50 junior mining stocks. Maybe own 5 to 10. So you can really focus more intently on those 5 to 10 companies and really know them well. So when the company puts out news, well, you've got context already because you've been following it for 2 years. So when you read that 2 or 3 page news, you get it pretty quickly. I mean, in 10 or 20 minutes, right? It doesn't require you spending a day to delve into it and really understand what the company is saying, right? So I think there's a couple of shortcuts that investors can use. And I think there's examples of people who are doing a good job of this out there on social media that are showing you that it's possible to generate alpha in this sector by really specializing and focusing.
Well, I think we'll wrap it up there for today because, Robert, I would put you in that camp of one of the 5 people should be following. You put out great content at all of your channels, and whether it's Substack or YouTube or what you're doing on CEO.ca, what you're posting about on X/Twitter. I mean, you put out some great content. You follow good companies. You help investors understand the macro, the technical side, the fundamental side, also the micro side of certain companies. So I'd put you in that camp, and if people listening in want to follow along with Robert's work, we'll put a couple links to his different platforms down below this. Robert, it's always great having you on the show to just get your thoughts. It was great seeing you at the conferences. It was great getting your take on China at the conference, and then I appreciate you recapping that for us here. It's fun to be giddy today on a day where gold's blasting up to new
Yeah.
all-time highs. It was fun to start a couple cryptos with you today, and looking forward, as always, to our next conversation.
Chad, have a great weekend.